sure we all see what's happening around us when it comes to access to consumer credit on your phone, on your iPhone, platform, internet, through apps, people access credit now. Today I'll focus on the importance of consumer credit for economic growth, the role of credit reporting generally in strengthening access to credit, and the importance of credit scores in facilitating consumer credit. Because when you say credit rating, I know that's what you want me to talk about. But let's start. Why does credit matter in an economy? An economy is basically about transactions. Transactions are the backbone of an economy. However, transactions, as we have seen, can be in cash or on credit. And it's to buy goods, to buy services, or financial assets. The total spending in an economy is a combination of cash and credit, and this helps to determine the vibrancy of an economy. And an economy cannot run only on only one of these. There's no economy that can successfully run on cash alone, and there's no economy that can run successfully on credit alone. It must be a combination of the two. If an economy runs substantially on cash basis, there will be a limit to the level of transactions that can take place, and the economic growth will be difficult to achieve. Therefore, credit really matters. Credit is often defined as the ability of a customer to obtain goods or services before payments, based on the trust that payment will be made in the future. Since about 4000 BC, when the Sumerian people began to establish the first world cities, credit was extended for what might have been the first time as come to stay since that time. The strong credit system promotes credit to consumers, which are individuals, and also promotes credit to businesses, especially the micro, small, and medium enterprises. With access to credit, effective demand is stimulated. And this process also propels an increase in demand for goods and services. But an economy is supported by access to credit. Also for commercial enterprises, production is going to be enhanced. Access to credit for businesses is productive credit, and it certainly helps to promote economic growth. So what we're saying is that when you have access to credit for consumers, it helps people to spend, because they can spend beyond what they earn and they can pay for it later. An economy that does not have that will then mean that people have to be saving before they can consume, and that limits their ability to consume. And that then means that the cycle of production will be affected, because they can only demand what they can save for or what they earn. Whereas if you have credit, it then stimulates them to have access to funds that they do not have and consume, and that increases demand. And that then leads to the other side, which is production. Once there's increase in production, then there will always be increase in demand. And then when there's also credit for production, for productive purposes, especially to small and medium enterprises, they also can then meet those demands, and then they can influence what is happening in the economy. And so as I'm making this picture, you begin to picture what is going on in our economy as a nation, where there is limit to access to credit for consumption, and there's also limit to access to credit for production. And that is part of why the poverty rate is always very high, as we can see in Nigeria. Now, today we'll be talking about consumer credit in particular. Why does consumer credit really matter? Generally, I've explained why credit matters generally, but let's now narrow down to consumer credit. Consumer credit is an important element of an economy. The consumer's ability to borrow money easily allows a well-managed economy to function more efficiently and stimulate economic growth. A consumer credit system allows consumers to borrow money or incur debt and to defer or spread the payment of that money over time. Having credit enables consumers to buy goods or services without having to pay for them in cash at the time of purchase. Today, most successful economies are driven by credit. In fact, I don't know of any successful economy, any economy you can refer to as successful. And what does successful economy mean? It's an economy that translates to prosperity for people. They live well, they eat well, they promote well. that's a successful economy. Poverty rate is low. People are able to send their children to school. They are able to live where they want to live peacefully. They are able to commute around their countries. They are able to go on holidays. That's a successful economy. There's no any economy that has those characteristics that do not have a very, very vibrant consumer credit entrenched in their country. Now, in the press release dated May 10, 22, the Federal Reserve Bank of New York, gave an indication of what is happening in the US as one of the good examples of a prosperous economy that is driven by consumer credit. It states that the household debt in the first quarter of 2022 increased by $266 billion to $15.84 trillion. $15.84 trillion. They highlighted that balances now stand at $1.7 trillion higher than at the end of 2019 before COVID-19. In Nigeria, Central Bank of Nigeria Monthly Economic Report for October 2021 also disclosed that the growth in consumer loan was driven by a 52% rise in personal loans and rose to 1.57 trillion in October 2021. The provision of consumer credit has a key economic function and is a likely beneficial activity, propelling spending and thereby increasing income levels of the country. It enhances productivity and leads to higher GDP. It has been proven repeatedly that an economy with strong credit culture improves standard of living, stimulates growth, and ensures prosperity of many of its inhabitants by enabling borrowers to purchase goods and services and spread repayment over time. This makes it possible for consumers to purchase items they need without having to fully save to purchase those items. For example, they can enjoy reasonable access to basic goods in life, such as food, shelter, education, commuting, and some relative luxuries. Many items from motor vehicles to houses and even television, air conditioners, and so on and so forth, are too expensive for most people to pay off for all at once, and therefore their own earnings and savings. And that's why you see people not living really well. Now, if you look at Nigeria as just a good example, how many new cars do you see on the road? How many people can have buying television of 200,000, 150,000, 170,000 with what they earn? In those countries where we see, in advanced countries, even in some other countries like in South Africa or in Kenya, a lot of access to consumer credit makes them to be able to have access to these basic facilities. People buy vehicles when, another one comes out in 2 or 3 years. They go and drop that old one, buy another one. The same thing with all this telephone. People use very sophisticated telephone, machines because they just don't need to go and get that 200,000, 600,000, 700,000 naira to pay for it. So that's what stimulates an economy, and that's how important it is for credit. The same thing for education or the children. A lot of Nigerians migrate abroad now because more often than not is because of their children. They want to give them better life, they say. What is a better life for a child? It's access to very good education. They can't afford it. Those who can afford it, send those children to abroad and pay for it, right? Those who cannot afford to pay $20,000, $35,000 on a child, would rather go there and stay there, and then they get the citizenship. And those children can now enjoy education through student loan. It's not free. Then they go to those schools, get a job, and then begin to pay the loan. And the parents are free from, piling up debt on themselves or not being able to give them quality education. And those children become global citizens. That's the major driver of it. Imagine we have student loan in Nigeria today, and students can have access to loans. Some of them will take advantage of that. Okay? But that's not what we are having in Nigeria. But it's not as bad. So Nigeria case is half full, it's not half empty. Let's talk about it now. The availability and use of access to credit is represented by the level of what we call credit penetration. This is measured by the ratio of total credit to the GDP. This is relatively low in Nigeria, and it underscores the challenge of access to credit in Nigeria. As of 2020, from the World Bank data, domestic credit to the private sector as a percentage of GDP, that's what we would use to measure how the extent of credit in an economy. Private sector, total loans to private sector as a percentage of GDP. The lower it is, the less credit that is available in that economy. Now, when you get the document I'm sending to you, you see the table. I just give Nigeria against 5 or 4 other countries. I'll give you an example. In Kenya, that moved to 32% in 2020 from 31% in 2018. In Morocco, it moved to 96% of GDP. In Brazil, 70%. In Malaysia, it's 134%. The total loan in the economy is more than the value of their GDP, which means people have access to loan to do anything they want to do. Guess how much is Nigeria? What's the rate for Nigeria? 12%. So that's one indication of how low credit penetration is in Nigeria. The other thing we use to measure it is credit bureau penetration. Now, what's the level of data that we have in the credit bureau? The credit bureau is an institution like ours that houses data of all borrowers in an economy, right? So, if there are so many borrowers in an economy, the database will be huge compared to the total number of people in the country. Now, in Nigeria, the credit bureau penetration is 14%. 14%. Compare that to Kenya, 30%. Morocco, 25%. Brazil, 79%. And Malaysia, 83%. So I put that table side by side. You will realize that the credit penetration ratio I mentioned before is similar to the credit bureau penetration that I'm mentioning now. Those countries that have very high level credit penetration are also the countries that have high credit bureau penetration. So this is where the process. But I told you that Nigeria case is half full, not half empty. Because when we started credit bureau business in 2009, bureau penetration was just 4%. But it has moved to 14 as we speak. By the time we finish the exercise that we're doing on the 2021 figure, probably will have moved about 17 or 18%. And we'll announce that. So access to computer credit in Nigeria has grown astronomically over the years. But it's still very, very low compared to what is happening in other clients. Credit bureau penetration has also grown over the year, but it's still relatively low when compared with other countries. I'm giving you two statistical information about how low it is. You know, for credit penetration is 12%. For bureau penetration is 14%. Then there are other things that have shown how bad it is. And I'll just take an example from access to credit for MSMEs. SMEDA, the Small and Medium Enterprises Development Agency of Nigeria, and the Nigerian Bureau for Statistics have done the census of SMEs in Nigeria, MSMEs in Nigeria. And they said there are over 41 million of them. Now, from the data available, less than 5% of these 41 million MSMEs have ever enjoyed credit for once, at least once in their lifetime. Less than 5%. So, which then means that less than maybe just around 2 million or 3 million of the entire 41 million MSMEs have ever enjoyed credit. From the database that we have, it's practically about 3.5% of MSMEs that have access to credit in Nigeria. So that's it. That's one other way to show you how bad it is. Furthermore, Nigeria has been characterized by significant disproportionate allocation of credit to different sectors. The sector that contribute the most are denied credit, while credit goes to the sector with relatively little contribution to the GDP. What do we expect? is that sectors that contribute more to GDP. GDP is about production going on in an economy, right? So you expect that those sectors that are contributing, where people are, and they are producing, they are making production, they are fully involved. You expect that that's where banks will give credit to. But that's not what we see in Nigeria. GDP, the contribution of agriculture to GDP as of 2018 was 21%. But access to credit, only 3.8% of credit goes to agriculture. Agri contributes 21% to GDP, but enjoys only 4% of credit that's available. Now, let's flip it to oil and gas. Oil and gas contributes 10%, less than 10% to GDP, but it enjoys 23% of credit. So for every 100 naira that we have as credit in the economy in Nigeria, 23 naira goes to oil and gas. Meanwhile, for every productivity that's happening in Nigeria, for every 100 naira of productive activities, only less than 10 naira of it comes from oil and gas. So you see a proportionality in those who need credit, they don't have. Those who contribute more to the economy and should have more credit to propel them don't have access to those credits. But those who do not contribute much in terms of contribution to GDP, I'm not talking of contribution to foreign earnings, contribution to GDP in terms of number of employment, in terms of totality of production. Oil and gas contribute less than 10%, and they enjoy almost 1/4 of the total credit to the private sector. So that's part of the challenge that we have in Nigeria. So even the small credits that we have is going to just a small proportion of the sectors of the Nigerian economy. What we expect is for the economy to be fully propelled. More should go to me and who are consumers so we can buy. More should go to small and medium enterprises so that they can produce, employ more people, and all the benefits that SME brings to the table. But that's not what we are seeing in Nigeria. And I can give you, we can go on and on like that. An effective credit reporting infrastructure for a credit risk management system will usually have credit bureaus, credit rating agencies, collateral registry, sound bankruptcy laws, and an efficient judicial system. Each of these will have a significant impact on access to credit, especially for consumers and SMEs. For the purpose of our discussion here today, I will focus only on credit bureau impact access to finance for consumers and SMEs. So what I'm saying here is that most countries in the world just don't shout about there are no access to credit for small consumers and SMEs. They try to find out why it is low. And they realize that government can support it. And part of what government does to support it is to ensure that we have good infrastructure. And I'll just demonstrate to you practically how infrastructure enables activities. So now Lagos to Ibadan. How long does it take now to go from Lagos to Ibadan?
About 2 hours, if there's no issue.
Okay. So 3 years ago, how long was it?
The whole day.
Okay. Why is that? Why was that? It's because there was a failure of infrastructure. So where there are no infrastructure, you cannot have efficiency. Somebody is supposed to travel from Lagos to Ibadan and he spends 4 or 5 hours. Me, I cannot, at least I can count 3 times I passed tonight on that road in the past. Then immediately the road is good. In fact, those days when they just constructed it, and I was a very young guy, I used to say between Lagos end to Ibadan end of the toll gate is 40 minutes. Because I was speeding on 41, 41, 60. That was how good that road is. And that tells you the importance of good infrastructure. Infrastructure is an enabler. It makes things happen. And there is nothing that happens that is efficient, that is not supported by some processes. What makes access to consumer loan easy is because there will be things that are needed to make that access to credit easy for consumers. In all these countries where that they have described, you realize that they have what we call credit infrastructure. Just like you have very good road infrastructure, they have railway, they have road, and they have water, waterways. Now, for credit, you need access to information to give loans to people. You only can give loans to only people you know, right? You need to be able to process the loan efficiently and with speed. That's the second thing you need. The third one, you need to be able to know whether the consumer or the borrower has the capacity to repay your loan. You also need to know whether when he has the capacity, he has the willingness to pay the loan. Now, you have to have policies, regulations, infrastructure that can bring all of that to happen in an economy. All the countries that I've told you have high credit bureau penetration and high credit penetration have credit bureaus, they have credit rating agencies, okay? They have good means of identification, they have good judicial system. Their laws is such that you can't go to court and spend 10 years on one case. These are what we call financial infrastructure, or what we call credit infrastructure that supports access to credit. Where you don't have those infrastructure, the best of bankers will not give out their loans, because they can't give loans that they are not sure whether it will come back or it will not come back. They want to give loan to you, they want to know you. They want to give loan to you, they want to be able to do it in seconds or in minutes. They want to give loan to you, they want to be sure that you have your business exists and is functioning and is viable. The credit bureau infrastructure is one of those infrastructure that enable them to have the kind of information they need to be able to grant such loans. So the objective of credit bureau or credit registry, as we normally call us, is to reduce information asymmetry between lenders and borrowers, to facilitate information sharing among creditors, to reduce the sense of lending in the dark, and to enhance informed credit decision making. These are the four things that we do, that credit bureau assist an economy to do, to benefit from. First is to clear out the issue of information asymmetry. The information asymmetry is, you know where you have accounts as a consumer, as somebody who has an account. You know how much you have borrowed. They are your bank account. I don't know. I only know the one you have with me. How will I know? What is that thing that will enable me to have that opportunity to know what else you are doing in financial transactions? It's the credit bureau that can enable you. That's what we call information asymmetry, where there is a gap in information between the borrower and the lender. So bureau assists to close that gap, because the bureau has information about all borrowers in the economy, and anybody who wants to give loans come to that infrastructure to check. And that institution doesn't need to ask you where you have loan or where you don't have loan. Once they come to there, they will see everything. Then it also encourages information sharing. All of us who are lenders in the economy, it enhances, it propels us, it stimulates us, it motivates us to share those information. There's no big deal about it. In those days, nobody shared information. Banks don't share information. But now they have to do that, and the bureau is the one that makes that happen. Then it is reducing the extent of lending in the dark. Lending in the dark is you don't know the customer. You can rely on what the customer tells you. And that's why you have to know somebody who knows the brand manager before you take a loan. So that the brand manager can trace you back through that same line. There will be a bureau, you don't need to know the manager, you don't even need to know where the bank is. I don't know how many of you have gone into banking hall. I don't know when last you have been in the banking hall today. I have not been the last 1 year. I don't need to. That's everything I can do. And I don't need to be in the branch where I open an account. I can transfer my business anywhere. So that's the instance of blocking, the instance of lending the dark. And then it makes decision making easy. It democratizes access to decision making. It takes decision making out of emotion. It's no longer it's my in-law, he goes to my church, he you worship in my mosque. No. It's about what do you do, what has been your history in terms of financial transactions. And then they can then, have a process around your information and then take a decision whether they want to loan to you or not and under what terms and conditions. And it can be very fast because those information are just in one place where they just drop to and then collect all those information. So, for the purpose of our discussion today, it may suffice to briefly examine how the presence of credit bureau impacts access to finance for consumer and SMEs in Nigeria. The presence of credit bureau promotes strong credit system, and a strong credit system promotes a productive economy by enhancing the quality of life of people through credit to consumers. A strong credit system normally and usually has a strong credit risk management system to fill the trust gap with reliable information. A strong credit system makes it easy to determine the capacity to pay and the willingness to pay by borrowers. And these are two major important pieces of information that creditors require. Any lender or any creditor lending, credit can be in two ways. It can be cash or it can be somebody sending to you on credit, right? So any of these two can be, you have to get the capacity to pay and the willingness to pay from that and be able to determine that. Having a good credit record means that a person has an established history of paying back 100% of his or her debt on time. A person with good credit record will always be able to borrow money more easily in the future and will be able to borrow money at better terms. If I've been paying my loans, if I've not been dodging, if I've not been loans that I'm supposed to pay every 25th of the month, and now we're paying the following month, the 40th. Okay? I can combining 2 months instead of paying every month. I'll be able to have access to credit. When a bank or a financial institution see that kind of record that I pay on time, they will be willing, they will be looking for me. Okay? On the other hand, having a bad credit record or history means that a person has had difficulty in the past with paying back his loans. And lenders are less likely to advance more money to a person with bad credit history. And that makes it difficult for that person to buy a car, to buy a house, or obtain a credit card. Access to credit is a valuable benefit which a person should protect and manage wisely. So that's why abroad they protect their credit score and their credit risk jealously. In fact, fraudsters steal those information. They assume, like masquerade, they assume that position. If your credit history is good, they find a way to steal that your record and impose it on their own, and then go and present themselves as you, so that they can have access to credit. And that's the direction that Nigeria will go, and I'll talk more about that as we move on. So it's been established that banks will continue to increase the amount of credit to SMEs and consumers where they could better predict the payment probability by their potential borrowers. This information theory of credit confirms that where lenders have adequate information about prospective borrowers, it will deepen the credit market. The empirical evidence has shown that countries with private credit bureaus enjoy higher financial penetration with higher credit to the GDP ratio. That ratio that I've given before, if you look at when did all those other 4 countries I give example, when did they establish credit bureau, you know that credit bureau have been with them for long. So, Nigeria just came into credit bureau system less than 15 years ago. And therefore, we still have a young credit bureau system in Nigeria. And that's part of why we haven't gotten around access to credit for SMEs and consumers. And now it's been proven over and over again that countries that have access to credit, that have presence of credit bureau, stimulate access to credit for consumers and SMEs. In the survey, and I gave some statistics here which you are going to see. The World Bank, in a study of 5,000 companies in 51 countries, conducted as far back as 2003, revealed that the percentage of small business reporting high financial constraint reduced from 49% to 27%. So where you have credit bureau, those number of SMEs reporting constraint of access to credit, they reduced from 49% to 27%. Now, on the other hand, the state also confirmed that the probability of obtaining a bank loan by a small company increased from 28% to 40% with the introduction of credit bureau, which means countries that do not have credit bureau, SME's probability of obtaining loan is just about 28%, whereas those who have credit bureau, the probability of obtaining loan successfully is about 40%. So clearly, credit bureau has a way to stimulate access to credit. And there are other examples of in Ukraine, in Ecuador, in India, in China, and in Argentina, where the impact of credit bureaus have been statistically and scientifically proven. A lot of work is still going in Nigeria to be able to establish exactly in statistical terms. They have given you some figures about how credit bureau present in Nigeria has also assisted in moving forward the consumer loans and SME loans. So this is what I'm going to be talking about now. And I'm talking about it from the perspective of my company, the CRC Credit Bureau. Nigeria licensed recurring credit bureaus in 2009, and the impact on volume of loans and reduction in the rate of non-performing loans have been remarkable. Loans to the private sector rose from 7 trillion in 2008. That was immediately before the commencement of credit bureau. It was just around 8 trillion. Now, by 2015, it has moved to 15 trillion. Now, by first quarter this year, loan to the private sector has moved to 36 trillion. So we are moving, we are growing. It's just that the growth has been very, very slow. Okay? Then special products for SMEs and the introduction of credit cards has become possible with the advent of credit bureau. In those days, there was nothing like credit card. You only have debit card, ATM card. That's the only one you have. Then now, all the banks have credit cards. As long as you can use it and pay before the date of 39, you can use free money. Okay? Buy anything you want to buy. So, furthermore, non-performing loans ratio, which was a reason why some banks failed in the past, also has come down significantly. As at the time we became operational in 2009, the level of non-performing ratio was 32.8%, was 33%. 1/3 of every loan granted at that time became good as of 2008. Now that moved to 9.3% in 2019. But as of December last year, it has come below 5%. Because now everybody is behaving with high level of responsibility. People who take loan now know that if they don't pay, they can't get loan anywhere else. So they don't have an option. Even if your loan is bad and you are owing only 1 naira, no bank will give you additional loan until you go and settle it. But beyond that, it's not just about settling it, it's about did you settle it on time? Did you settle it in line with the conditions and terms? Okay? So that's what we have seen. The healthy loan portfolio are made possible among the factors by the introduction of credit bureau, by the CBNs conducting stress tests, and by the establishment of AMCON, which enable all the bad loans at that time to be bought over, and then they had a clean book from that moment. CRC has improved access to credit for consumers. When it commenced live operation in 2009 as a credit bureau, it had only 6 commercial banks, which invariably successfully submitted credit records when we started. In its first month of live operation in 2009, only 49 credit records were sold to banks. CRC now operates as a group structure, with the credit bureau company having about 1,600 institutions using the bureau, with over 50 million records in the ecosystem. Today, millions of searches are conducted on the platform of the company through various media, such as web. There are those who access the information using websites. There are those who have direct connection to us through API, and they can immediately, every minute, get information they need without anybody, without interference from without any manual intervention. And there are those who batch, information. They want information on 1 million customers. They can get it within 1 hour. So these are various methods by which they are accessing the information. In effect, therefore, as 1,600 corporate entities in the service of the company, cutting across all part of financial institutions, insurance companies, communication companies, electricity distribution companies, cooperative societies, pharmaceutical companies, retailers, conglomerates, travel agencies, hospitality business, etc. So don't be surprised if you discover that your electricity consumption, EBO, is already in the bureau. If you are in the Ikeja area and you are using the Ikeja disco and you are owing them, they put it. If in Port Harcourt, the same thing. If you use the postpaid of MTN or Airtel or any of your Glo and you are owing, you cannot abandon that line and run away. The information comes to the bureau. You know, so if you stay in hotel, maybe you are pumping and you enjoy, people buy tickets on credit, they travel, and then when they come back, they don't want to pay because the information comes to the bureau. So that's the way a bureau operates, and that's how it is. So Nigeria, CRC has covered about 95% of the credit market as we speak today. Every day, new companies are joining and submitting data and using the bureau. CRC set out to empower, to enable, and to strengthen the capacity of lenders and creditors. CRC has developed a variety of products and services to help lenders decide with trust and confidence. These for institutions and lenders to be able to take decisions with confidence, with trust, with information. If they have the right information, they will be able to provide customers with confidence, and they will be able to know whether they should lend or they should not lend. And if they are going to lend, under what terms and conditions they should lend. That's what we will do. The value proposition to our customers include assisting them in identifying credible customers. So we also then assist them to know who they should lend to, who they should not lend to. Manage existing credit facilities or receivable, and when they are giving loan, the facility, the bureau also assists them to be monitoring what is happening. Because somebody takes a loan today, at the time you gave him loan, he's taking loan only from you. 2 weeks or 1 month later, when you check again, you realize that he's taking another loan from somewhere. If somebody showed me an example of somebody who borrowed from almost 16 all these online lenders, 16 of them took loan from all of them. You know. So and then went to another type of finance and wanted to take another one. Yeah, this one now saw that. These are the things. So the company which took off the full credit position report today. So and we also have facilities for them to be able to manage loans that have gone back. Some people take loans, they run away. Okay, you can't see them in the address again. But they are still doing transactions in the economy. So we assist them to be able to have relevant information, up-to-date information about those borrowers who run away from the address or the information they gave when they were taking those facilities from those institutions. So we have all manner of products, as we speak about 15 products that help to identify customers to sell to give loans to. We have products that they can use to manage existing loans that they have granted. They have products and services that they can use, to manage accounts that have become delinquent or bad, as the case may be. And that's it. The one that is the thing that you asked me to talk much about is the credit scores, because that's what you refer to as credit rating. And CRC has come up with 2 scoring solutions. One scoring solution is what we call CRC credit score. What is a score? A credit score works like this. All the information about you, about the facility you are taking, is brought to the credit bureau by the lenders. So financial institution wants to take a loan, they give your name, your telephone numbers, all the telephone numbers you give to them, all the addresses you give to them, all the loans you are taking, and the terms of the loans are given to us, and where you are a guarantor also, they give such information if you have guaranteed a loan. So all those information and then the performance of the loan, they also give to us. We see that all the time. Now we have developed a system that now looks at all of that and now assign and convert it to what we call a credit score. So credit score that we have in CRC starts from 300. The lowest anybody can have is 300. The highest anybody can have is 850. Okay? So, and the lower the score, the higher your risk. The higher your score, lower your risk, the least risk you are. So because it's 850, those who have 700, 750, 800, 850, they are the good candidates that financial institutions always look for. Because by our algorithm and the internal processing, it has shown them that these ones, for all the borrowings they have taken in the past, they are fine, they stay on time. But if somebody is on 300, 400, 450, 500, it means run away from them. So what banks and financial institutions just do nowadays is to just allow their credit analysts and have a cut-off mark, just like JAM. Every institution, every financial institution now have a cut-off mark. Okay? So just like in JAM, if you want to do for Unilag, maybe the cut-off is 250, right? But for National State University, maybe it's 180. So every institution knows the tolerable limit of the risk they want to carry. Somebody is looking for a cut-off mark of 200 and 250. Is looking for very bright students, right? The university that says if you score one, you come on board, knows that they will not be able to attract those who have 250, 280. It's the same thing with credit scores. With credit scores, some institution will say if you score less than 600, we are not going to give you loan. You are high risk. We don't want to be running after you. Some will say, okay, if you score between 500 and 600, we'll give you, but you have additional one or two conditions you have to fulfill. Some even will say, okay, if you score about 700, your loan will be 12%. But if you score around 500 to 600, your loan will be 18%. Because you are a higher risk to them. So you have to pay more because they need more resources to start running after you. And the probability of your loan getting banked is higher than somebody else who has like 600 or 700. You understand what I'm saying? So that's what the credit score does. So the way it works is it then democratizes access to credit. It's no longer who you know and what you know. It's that figure that they are looking for. What is your credit score? Alright? And they can then also use IT infrastructure to now connect to us and just be downloading the information. So they free you. You cannot sit down on your table and be manipulating and be writing good English to justify why somebody should be giving credit. That figure is already there. So if your UPA says it's 550, once your customer says they want a loan, you just go to the CRC website. How's this cost for Tunde Popoola is 440. No, sorry, it's not give you loan. Okay? So that's the way the credit score works. The other one we have discussed is the one we call the delayed propensity score. We realize that when Popoola came on board, a lot of businesses ran into problems. People couldn't go to work and they could not run their business. People have companies that have loans, they are unable to service those loans because they do not sell. Now, we developed an algorithm that enables lenders to know who is likely to go into this challenge. Of all their customers they have granted loans to, who is likely to be able to face the challenge of not being able to pay as a result of COVID. And when COVID is exceeding, as we are drilling down COVID and we are getting free to go out and people are doing all things they want to do, we now improve the algorithm to be able to see those who may be facing other challenges, other economic challenges, it can be economic, it can be social, so that they can predict whose loan is likely to go bad. If they know loans that are likely to go bad, then they can come to you and say, how can we assist you? Okay, they don't need to wait. This second one is not talking about those who already have bad loans. It's talking about those who are enjoying and have good loans, but they default by circumstances for their loan to become bad. So that the institution can be very proactive. Proactivity can be then come to you and then say, okay, maybe we should repackage the loan for you, or maybe we should do this for you, maybe we should do that for you, in a way that can assist you to repay. Don't forget that the only objective is also at the end of the day for you to be able to repay your loans. Okay, so that product is also available now, and the banks and the financial institutions are using it. Now, as we are going towards the end now, what are the issues that confront credit reporting in Nigeria? What are the challenges that we still face that have not made the system to work better than it is today? That the rate of credit pressure is still relatively low in Nigeria, despite all the policies of government and the presence of credit infrastructure that have helped further economy to deepen access to credit and indication. There are some fundamental challenges that require ruthless and focused attention. We started by mentioning that in the last few years, Nigeria has undergone profound changes due to the advancement of technology and smart data. Digitization has helped the financial system to improve access to consumer and retail loans. Today, virtually all commercial banks have online banking. They are using USSD and other tools to improve their capacity to be able to lend to consumers, as well as special desks for SMEs. They have also developed applications for automated lending processes. And with this development, there has been a significant increase in access and speed of processing loans, most of which are small amounts to meet urgent needs. Artificial intelligence, machine learning, and blockchain technologies all have continued to propel use of processing loans and deepening access to credit. I was saying the other time, I can't remember the last time I was doing that. And I'm sure that some of you are getting loans even using apps to obtain loans. That's where we are today. We have also seen the rise of fintechs, micro lenders, and shadow banks. Shadow banks are those institutions that are not banks, but they are granting credit. Those are the institutions we call shadow banks. They cannot collect deposits, but they can grant loans. There are alternative ways to accessing credit, and they are all competing with banks, and they are rising in Nigeria. There are so many of them coming on board now. So a significant issue still facing access to credit in Nigeria is the full coverage of unique identifiers. This issue of means of identification is still a major issue in Nigeria today. The country has multiple forms of government-issued identifiers for individuals, including national ID, BVN, driver's license, voter's card, international passports, pension fund numbers, all of them. In most countries with successful credit bureau infrastructure, there is always a single means of identification, not plural means of identification. So in Europe and America, for instance, it is the social security number they use, and everybody has a social security number. In fact, if you send your child abroad and immediately he enrolls in school, they have a number. In Egypt, it is the national ID card, like the one we are trying to do, but every Egyptian has it. That's the difference. Okay? In India, it's also unique identifier like us. About 1.4 billion Indians have unique identifier. We are 200 million people. We are not able to get everybody to have it. Okay, this is because Nigeria needs to embrace a unique identifier. We need to have one number. And the current situation makes data matching very tedious. Imagine, I told you bureaus collect data from all sources. So the telecom companies, they don't have BVN. They give loans, right? People use postpaid, but they never ask for a BVN. They use the telephone number you use. So they submit their data using those telephone numbers. So imagine how I use postpaid, and it's postpaid that I use. So I'm on credit with them all the time. And they submit my data with my telephone number. So I've taken another loan with ASO Savings, a mortgage loan. ASO Savings have my BVN. Okay? I collect personal loan from UBA. UBA has my international passport. So when they submit all this to the bureau, with my name is Tunde Popoola with telephone number so. My name is Ahmed Tunde Popoola with ASO Savings with BVN so. My name is Tunde Ahmed Popoola with UBA with international passport number so. How do you combine this and get just one report for me? That's the challenge. That's why we keep on insisting that there must be a unique identifier for all Nigerians. And that number becomes sacrosanct for everyone. All other numbers, all other means of identification should take a cue from that number. So the NIMC, the National Identity Management Commission, has been given the mandate to bring all these means of identification together and have only one. And they have been rolling out what they call the National Identification Number, NIM, right? But only 7.7 million people already have that as of March 2022. Now, 77.7 million out of 206 million people. By the NPC official statistics, we are 260 million people as at that same time, as at March. And 77.7 are already enrolled with NIM. That means the 33% of Nigerians that have NIM today as we speak. And you all know what people go through to have this NIM. So we need to speed up the adoption of NIM to full coverage of the country, and for every Nigerian to have that NIM. That's very important. This unique identifier will further enhance the efficiency of blockchain and machine learning technology. And you see the transformation that will still happen once everybody can be identified with that means of identification. Like I told you, technology and communication tools using blockchain, using machine learning, using artificial intelligence can do a lot of data. We are in the era of data. Data is everything. Because data gives information that financial institutions need. But that data will be limited as long as they cannot trace it to you and me. If they can trace only 77 million people out of 216 million, then there's still a problem. It means only 1/3 of the population has a full coverage of means of identification that is unique to us. Why do I have to have different numbers for passports, for pension, for driver's license, for BVN? So that's the challenge, and that challenge remains one of the major limitations of access to consumer credit in Nigeria today. Now, immediately India was able to register 99 or 95% of their population through that means of education. They transformed their economy. India has about 1.5 billion people, but the number of poor people in India today, they are lower than the number of people in absolute terms in Nigeria. That's why Nigeria became the world capital of the poverty. We are just 100 million people. Over 100 million of us are in poverty, which means over 50%. So that's the issue. That's the first major issue. Another major issue is the judicial system, and I think I've mentioned this before. Prompt dealing and disposal of commercial cases, especially those between lenders and borrowers, help the system. The judicial system should engender confidence and boost a credit economy with prompt resolution of cases. A few initiatives have been introduced. We now have alternative dispute resolution (ADR), where you don't need to go to court. The first thing they do is when you have a case, they take you through that. You can settle your case. If you don't now agree on that, then it goes to court. There are cases that we have, that people have that. So even assign it to a judge takes more than 3 years. And then there are cases that are signed to get it mentioned. And then not to talk about when it's now mentioned and you now have a judge to look at it, adjournment of adjournment. And because it's not criminal cases, I mean, they are not regarded as criminal, they are contract cases. You borrow from me, you are not paying, I take you to court. Or I borrow from you, you said my indebtedness outstanding is 1 million, me I recorded it as 10 million. They regard it as civil cases, right? It's not criminal. So banks don't, judicial system don't give priority to it. And this discourages, that's why for you to get money from banks, they want to be sure that it is not going to run into litigation. Because they know once it runs into litigation, you hold on to that money for years without paying it. And that's the challenge. That's another challenge you have to. The court system, the judicial system is an issue. Then the issue of low financial inclusion also remains a challenge. Financial inclusion in Nigeria today, how many of us have bank accounts? There are still about 40% of Nigerians who are bankable, who should have access to bank accounts, who should have bank accounts, they still don't have. How do you collect loan when you don't have a bank account? So loans can only go to those who already have accounts, who which means just around those 60%. It's from those 60% that banks can then look for they can give money to. For the remaining 40% who are excluded financially, there's no way they can have access to formal lending or formal access to lending because they don't have what it takes. Their information is not anywhere. So, and that also is a challenge. And that's why the CBN has been making all efforts to make sure that everybody, in fact, the banks themselves, you can open an account now without walking to a banking firm, right? For some banks. They now just license PSB for even telcos to have banks. Okay? So that at least if you don't want to go to Wema Bank or go to UBA, if it's your telco that you want to have account with, go and have an account. But at the end of the day, we bring all of that into the system, and then we can promote access to credit. Then finally, for small businesses, I think the whole issue is, in addition to all that we have said, is about formalization of their processes. For most SMEs, formalization and the adoption of basic governance practices will improve their access to finance generally. Simple financial record keeping, auditing of financial records, putting structures around the day-to-day running of their business can go a long way in building the confidence of financial institutions and other providers of funds in dealing with them. Few years back, before COVID, the Bank of Industry began an initiative. They hired consultants. What did they tell the consultants? Go out there and look for SMEs that want to borrow. Help us package them in a way that they can become banking. So these consultants went out looking for small businesses. They will now help them to have record keeping, financial records. They help them to open accounts. They help them to restructure the way they operate. And once they are proper, they are like preparing a girl for going into marriage. And once they have prepared them very well, they now can apply for loan. Because the loan is somebody else's money that you want to take. So we need to be comfortable that you'll be able to repay that loan. And what can make it comfortable for us is that we can see record of the transactions that we are doing. When you are running a business and your name is not different from your business, how do I know that I am not going to collect my money and use it for something else? If you cannot separate your personal account from your business account. And if you have a business account and there is nobody that has access to it, the checkbook is in your portfolio all the time. It's only you. So these are issues that confront MSMEs, and that's part of what the challenges that we have that have not enabled them to have access to credit as well. The future of consumer credit and the role of credit reporting. So let's not talk about where do we go from here. This is where we are today. Emerging technologies and data analytics will continuously change the way consumer credit is granted. Today, there is a growing number of fintech companies, challenging the norm. The evolution of smart data will continue to heighten the quantum of data used for credit decisioning and shortening turnaround time for processing loans. So what we are going to be seeing moving forward is because of all the tools that technology and computation, the devices are enabling us to do, is just take your phone, download that now, and take a loan. Within seconds, that's what you're going to be seeing. And we're already seeing them. Okay? You're going to be talking to a robot. You're not going to be talking to human beings in banking hall. Okay? And as you are sending, every system, including us at CRC, when you relate with us now, there will be somebody replying. It's not human being that replying, it's machine. You've been trained to be able to some level of brain intelligence to identify what the issues are and reply you. So that's what the future holds. In a way that has meant it, but that cannot really be entrenched where we don't have opportunity to identify who is the person relating with us. And that's why we go back to the issue of unique identifier. Make it as available to as many Nigerians as possible, if not to all Nigerians, to at least bankable Nigerians, adults, must have it. I foresee a time when we will walk into our neighborhood supermarket and access credit on the spot. I foresee that where you just go to supermarket beside your house or in your neighborhood, and they will have it there. I want to buy something. I don't have money, but they want to know whether they can give the thing to you on credit, and they can go into the system and see your information and know whether you are creditworthy or not. That's the future that we are seeing. I foresee a situation where rent will become monthly thing, like you see in all parts of the world. Lagos State is trying to legalize it, to make it, you cannot pronounce that kind of thing by law. You have to make the infrastructure that will enable people to do it available. Why are we asking for 3 years rent? Because we don't trust the person we are giving our house to, that is going to be able to be paying us. The minute we are able to have opportunity of this kind of thing, then people can pay monthly. And so as a landlord, you also then enjoy continuous cash flow, regular cash flow. Alright? So I foresee that. I foresee that with the growth of data reporting, the private sector can continue with this. I foresee that with the growth in data reporting, the private sector can continue with this, thereby enabling tenants to pay renters to their landlords directly every month. I also foresee the total adoption of credit scoring system for granting consumer loans. I foresee where everybody will be asking, where is my credit score? What's my credit score? And guiding it jealously from theft, from being swapped by fraudsters. We don't talk about identity fraud in Nigeria. It's going to be a major issue when this issue comes up, because like I tell you, people will no longer be stealing your money directly because they know you don't have the cash in your home. But you have it in the bank. Where you don't have it in the bank, they know you have a very good record to borrow. So if that's your identity, they will go to steal and impose their own identity on your own. And then they become you, looking very well, looking very good, have very good credit history, have very good record. And then they can use that one to borrow on an assumption that you are the one borrowing. That's the problem they confront abroad, and that's the trend that is going to come. So people are going to be looking at their credit scores and be checking it every time to be sure that it's correct, it's high, and that nothing disturbs it. Individuals become cautious and be mindful of their credit rating and score. Where an individual has not accessed credit in the past, alternative data will be used to generate a score. So it's not going to be those who have scores. It's not just going to be those who have already enjoyed credit. Those who have bank accounts, those who use SMS, those who use WhatsApp, those who use email. Algorithms are now being made to be able to configure all this information and use it to determine your credit worthiness. With the kind of message you send, with the kind of site you go to on Google, with your bank statement, deposit bank statement, not the one on loan because you have never taken loan. All of that become alternative data that can be weaved together, woven together, and then creditworthiness will be able to read you that this person. So how come we know that, for instance, today now, if you go into a website today, let's say on credit, you can try it, and I'm sure some of you try it. Just go to creditworthiness. You'll be surprised that before you get to your house, you'll be receiving all kind of information of credit that will be coming to you, like they will be sending mail to you. How will they know? That's the economy. That's where we are going to. That's where we are today. That's what the future is. There is intelligence in machine learning algorithm that is already once you are visiting some places on the system, they know you like this. When you watch a film, they will recommend another film in the same category. So when you Google credit, they know you are interested in the subject of credit. They begin to send materials of credit to you. All those information are what we are now putting together to determine what you like, to be able to know who you are. We will know you much more than you know yourself. And those information now will be used to now sell credit to those who are identified to be interested in credit. Now, access to credit for consumer in the future does indeed look promising. It looks exciting, putting the control in their hands and no longer in the hands of credit grantors. Finally, to conclude, The challenge of access to credit confronts consumers and micro, small, and medium enterprises much more than the large enterprises. Large enterprises have easy access to credit, but to stimulate economic growth, reduce poverty, and engender prosperity, there must be significant improvement in access to credit and other forms of finance for consumers and micro, small, and medium enterprises. It is instructive to know that government intervention through grants, subsidies, and other special arrangements and incentives will help, but they cannot unleash the required exponential access required to stimulate economic growth. So all these 4 trillion of CBN, all these Bank of Industry, Bank of Agriculture, next day, they are just going to be like a drop in the ocean. They will support, but that cannot stimulate the huge access to credit that we need. Alright? The focus must be more on policies and programs that promote market-driven initiatives. It's not government establishing banks that will solve the problem. It's empowering infrastructure and enabling infrastructure, bringing out policies that will make the market to be interested in granting credit, that will make this successful. And this is by addressing the issues constituting government and taking against full of credit consumers and businesses. There is no doubt that the journey towards the full access to credit, especially for consumers and MSMEs, has helped with the establishment of credit bureaus, collateral registry, and digitization. It can only get better. The situation today is different from what it used to be several years ago. Significant improvement in access to credit is being experienced. New players are also coming to the system, especially those that can be classified as shadow banks, mostly fintechs, money lenders, and telcos. They process loans with speed. This phenomenon has influenced most of the commercial banks to also take their lending model, embrace technology, and build the capacity of their personnel to enable them to service consumers with low-value loans. As technology is assisting in addressing the challenge of financial inclusion, it will rub off on lending and improve access to credit for consumers and small businesses. It is also important for us to touch on the unpleasant, unethical, and embarrassing practices of loan sharks. Some micro lenders and fintechs. A lot of Nigerians have gone through harrowing experiences in their hands. Their rates are usurious, and their debt collection management are barbaric, evil, embarrassing, and stressful for their customers. We are also beginning to witness fraudulent employment and use of apps, leading to loss of funds, unethical lending practices, and usurious charges. The Nigerian government embarked on a clampdown on some of them not long ago, but this has not stopped them. Our regulators, such as the Central Bank of Nigeria, the Consumer Protection Council, and the Securities and Exchange Commission, need to do more. They need to be firm and decisive. There must be a way to bring these operators under regulation and rank high-level scrutiny. A friend of mine, just on Saturday this weekend, a boy to me, so I received a WhatsApp message with a image lying down like critically ill. They said, this guy, Mr. A.A., be careful with him, he's a problem person. He slept with a mad woman and killed the mad woman, and then take some part of the mad woman and went to prepare concussion for his children because he wants to make money ritual and send that out. And then I was like, no, this guy cannot do this. And then I started calling him. Where are you? He said, oh, God, I'm in my house. What are you doing in your house? Said, I'm here, I'm working, and I have some things I'm doing. And then my wife. So the following day, I'm now calling him. Did you see? He said, yes, somebody drew his attention to it. He borrowed, used an app to borrow 12,000, 7,000 from one of these guys. And then within 1 hour of that money being due, they said he was meant to pay additional 5,000 on the 7,000 within 7 days. And because he didn't pay it at a particular time on that day, they just released that kind of information that had nothing to do with it. I don't know whether you also have been receiving messages. So those are issues that government should confront
head on. These are disasters. This is making nonsense of all the effort to get access to credit. And because Nigerians are desperate because of the poverty level, unemployment, and all of that, people just want to have access to, money. And this is what is happening. Why will anybody be able to do that? Why will anybody have to app? You download the app, you borrow. Some people want to get into that circle. In fact, there was another one that came to I sent it to you. That you keep on paying and they keep on saying that you have not paid it. So government needs to do a lot. Consumer Protection Council, the Special Education Commission, the CBN must go beyond that. They need to have sophisticated tools to be able to identify all these people and make sure that they are not able to do this in the country. Finally, the Central Bank of Nigeria released the guideline for open banking recently. When this is fully operational, it will help access to credit from consumer and SME as well, because open banking means the data is available to all players. So it can help them to develop products that can make them to reach you faster, that can make you to have access to credit faster. And all of this is in a way to promote access to banking services, including access to credit. While there is no doubt that the use of access to credit consumer is more feasible than ever, now than ever, it can only get better. Distinguished ladies and gentlemen, I thank you for the opportunity to address you this morning and for your rapt attention. Thank you so much.
Thank you very much, Dr. Popoola. First and foremost, I want to congratulate you for metamorphosing into a group. Congratulate you. And for the lecture, I want to think that you are really done noble. For